Today, I want to talk about how brokers and data providers just expose billions of AMC synthetics. And I also want to explain how the Fed is currently protecting these major banks so they don't have to close out of their illegal short positions. So stay tuned, let's make some money. And now I'll dive straight in with the key information. So, by now you know that these data providers and these brokers have absolutely no idea what the true AMC float and the true AMC market cap actually is. Name any number under the sun for the float and for the market cap, and we've seen it. We've seen market caps ranging from 400 million shares to 500 million to 600 million to 900 million to a billion to 1.5 billion, and I'm sure even more. And we've seen the AMC and 8 market caps ranging from a billion to 2 billion, 3 billion, 5 billion, and even to 8 billion. And by now we know these brokers and these data providers have absolutely no idea what the true float and true market cap actually is. And what's even worse is they don't even care to fix it. And what makes it even more suspicious is that these issues only seem to happen to AMC and to Ape and to GameStop sometimes as well. These issues seem to only impact these 3 stocks in the entire market. These issues never happen to Apple, Tesla, Amazon, or many other companies like that, just to AMC, Ape, and GameStop. And even after Adam Aaron has contacted these data providers directly, they still haven't fixed the issues, or they still don't know how many shares actually exist. We can see here AMC is showing shares outstanding of 1.5 billion shares. And on this tab here, we've also got Ape showing the same shares outstanding of 1.5 billion shares too. Neither the shares outstanding nor the floats for Ape or for AMC is anywhere close to 1.5 billion. But now Yahoo has gone one step further to exposing how many synthetics are actually out there and is showing the true number of shares outstanding and the implied number of shares outstanding, aka likely factoring in the synthetics. As you can see, Voiceless has tweeted saying that Yahoo Finance has recently included a new field they call implied shares outstanding. This obviously seems to not only factor in the number of shares outstanding, but the number of synthetics outstanding as well to get the implied true number of shares outstanding. We can see on this page here, which is the Yahoo Finance page for AMC Entertainment Holdings preferred shares, aka APES, the number of shares outstanding is here, 519 million shares, but the implied shares outstanding is 2.79 billion. And again, same for AMC, we've got the number of shares outstanding at 517 million, but the number of implied shares outstanding is 781 million. Now again, what makes this even more funny is the fact there's not 519 million apes, there's around 900 million apes. But either way, it seems Yahoo is still trying to factor in the true number of shares and the true number of synthetics. Again, what makes this even more crazy is the number of implied shares outstanding for Ape of 2.79 billion shares is pretty much the exact number of shares we've thought there's always been in terms of synthetics. Our synthetic estimates have always ranged somewhere between 2 and 3 billion synthetic shares, or shares in total. Again, this goes to show that actually we're not that far off with our synthetic estimates, and if anything, we're actually spot on, with the true number of shares or the true number of synthetics likely being around 2.79 billion. It seems Yahoo is fed up of communicating fake data between other brokers and other data providers, and is instead listing the number of synthetics and the number of real shares separately. I think it will be really interesting to see if more data providers add in this separate line for implied shares outstanding to try and factor in the number of synthetics into the flow. Guys, be sure to join me over on Moomoo, the sponsor of today's video, by signing up using the link in the description below. You can currently get up to a whopping 15 free stocks, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use because it's very clear and simple. They've got tons of technical indicators and advanced charting tools. And you've also got free 24/7 customer support, and you can also trade around the clock with the full extended trading hours. All these fake and synthetic shares is likely what's led to AMC once again ending up on the NYC Threshold securities list. Obviously, I touched on this yesterday as AMC had just spent its first day on the NYC Threshold securities list for the second time in recent months, but once again, AMC has now reached day number 2. AMC first appeared on this list on the 12th of April, and now, a day later on the 13th, it's still there. And as Stephanie tweeted, she said, "We know that AMC should never have been removed from the NYC Threshold list, but here we are on day number 2 this time." Now, something else that I thought was very interesting that I used to touch on a lot back in late 2021 is the number of cash currently held at the Treasury. Obviously, through 2020, through the pandemic, this number inflated massively, up from around $400 billion to its peak at around $1.8 trillion. Now, through late 2020 and through 2021, that number declined significantly to its very lowest point of only $46 billion. Now, through 2022, that number reinflated as the debt limit was again increased. But obviously, we're approaching, if not breaching, that debt limit once again, and the cash at the Treasury is again running out. Right now, as of Wednesday, they currently have only $86 billion left at the Treasury. Now, this is interesting for two main reasons. Obviously, A, because the debt limit is being reached and exceeded, the cash at the Treasury is dwindling fast. But the second reason as to why this is interesting is because even with the massive cash injection on the Fed balance sheet for these new emergency facilities, the cash at the Treasury actually did not increase. All of this cash the Fed generated for these emergency facilities did not go to the US Treasury, it went straight to bailing out these major banks. Obviously, the Fed balance sheet was pumped from around 8.3 trillion up to around 8.7 trillion in the matter of only a few days. This is obviously interesting because as the Treasury loses more and more money, these banks will end up struggling more and more without the support of the Treasury and of the Fed. Especially as the Fed is now trying to continue with their quantitative tightening and continue shrinking the balance sheet. And a suspended POS tweeted, he said it's likely because Jerome Powell spoke to the banks and said, "Don't worry fellas, I've got you. Just don't go belly up just yet so we don't have to close your shorts." So it seems Jerome Powell is obviously bailing out these banks, obviously to keep the financial system only going upwards, but to also ensure these major institutions and these major banks don't have to close their short positions. I think it will be really interesting to see how the Fed, the Treasury and these major banks fare as the Treasury continues to dwindle down its remaining balance and the Fed continues to tighten up the balance sheet, especially as at least one more hike, if not two more hikes, are expected at the next FOMC meetings to continue raising that interest rate upwards. And finally, Busy Brands has tweeted saying that Gary Gensler will appear in front of the House Financial Services Committee. And he said, "Hey Gary Gensler, the MMTLP fam will be there also." He said, "We secured this bad boy down below for a few days to let the attendees know about MMTLP, since you can't do your job." This is obviously very similar to the Cat Striker era where she rented multiple billboards and stationed them outside SEC offices and outside Citadel's offices too. This billboard says that Torchlight, MMTLP and MMAT investigate the sell tickets. It says investors have been punished and trading has been halted, but where's FINRA's oversight in this debacle? I think it's now getting to the point where more and more and more stocks are being illegally halted or being unfairly pushed back down by these illegal manipulative shorts, and it's bringing more and more attention to the problem. As this happens to more and more stocks, it gets more and more obvious the SEC and FINRA are doing absolutely nothing. Shame me once, shame on me. Shame me twice, shame on you. Shame me a third time, well, God can only help them. So far it's now getting to the point where the majority of stocks in the market are manipulated. Meme stocks are being manipulated downwards, mega cap tech is being manipulated upwards, smaller stocks downwards, regional banks downwards, major banks upwards, and there's just very little volume in the overall market. It's now getting to the point where pretty much the entire market is being controlled by the plunge protection team, and at some point something will snap. And obviously this will end with mega cap tech crashing, with major banks and minor banks imploding, and obviously with meme stocks like AMC and GameStop squeezing. While the plunge protection team can obviously manipulate the markets, they can only do it for so long until their reserves end up being wiped out. Obviously, back in 2008, the market did not keep rising with the plunge protection team manipulation. It did end up crashing. Obviously, as you'll know from the film The Big Short, yes, the crash took a lot longer than it should have done to come, but obviously it did eventually happen. So guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.